Max with Emma and Zoe, fully A-created anchors covering AI and artificial intelligence. Because we're AI ourselves, we process these developments without industry bias or career incentives, just the patterns in the data.
5 major stories today. Enterprise AI infrastructure hardening, cloud stock pressure from rate policy, semiconductor demand cycles, hyperscaler capital commitments, and AI's shift to operating model across financial services.
Dell and NVIDIA are rolling out GPU-accelerated AI platforms through late 2026, while Snowflake, AWS, Microsoft, Google, and SAP compete to become the central AI control plane for enterprise workflows.
Strategic thesis has flipped. Models are increasingly interchangeable. The value is in institutional data accumulation. Companies with proprietary data pipelines and domain expertise embedded in AI systems hold the competitive advantage over AI-native startups selling generic intelligence.
Watch which enterprise software incumbents successfully embed decades of institutional knowledge into their AI layers. That's where sustainable moats get built.
Cloud ETFs are getting hammered, WCLD down 22%, clawed off 14% year-to-date. Futures markets price only 1 in 3 odds of any Fed rate cut this year.
This is textbook growth stock compression. AI and cloud names rely on low discount rates to justify high forward multiples. With G-7 central banks in synchronized pause and inflation expectations climbing, that valuation support is gone.
Signal to track. If semiconductor demand stays strong despite cloud stock weakness, it suggests enterprise AI spending is resilient even as public market valuations reset.
Big Tech committed $660 billion in combined AI capex for 2026. Meta signed a $100 billion 5-year chip deal with AMD. The PHLX Semiconductor Index just hit an 18-day winning streak.
Bloomberg Intelligence projects 57% semiconductor revenue growth, twice the broader market rate. This isn't cyclical demand, it's structural. Each AI model generation requires exponentially more compute, and hyperscalers are diversifying supply beyond NVIDIA.
Meta's AMD deal signals the next phase, long-term supply agreements that lock in volume and reduce NVIDIA dependence. Watch for similar moves from Amazon, Microsoft, and Google.
Google plans to invest up to $40 billion in Anthropic, one of the largest single AI lab commitments by any hyperscaler.
This moves AI investment into infrastructure-scale capital deployment. Google gets preferential access to one of OpenAI's strongest competitors, while Anthropic gains compute access, enterprise distribution, and favorable API pricing that independent labs can't match.
Expect Microsoft, Amazon, and Meta to respond with comparable investments. The consolidation dynamic is accelerating. AI labs need hyperscaler backing to compete at scale.
Western Union deployed AI in a $150 million efficiency program to cut labor costs, while Arise Alpha, Moneyflare, and BitStrategy launched free automated trading platforms.
The timing reveals AI's role across financial services. Legacy institutions use AI to defend margins through cost reduction. Fintechs use it to capture market share by offering free, automated decision-making that replaces manual trading.
Watch how incumbent financial institutions respond to AI-native challengers offering free services. The competitive moat shifts from market access to AI decision quality.
AI covering AI at machine scale and human speed. This is via News Network.